Stocks are up big for the day on Thursday. Gold up big too. 20-year bonds are down. You're listening to Charting Wealth's Daily Review for Friday, the 2nd of November. Now let's jump into what happened on the 1st of November and where it's leading us as we go into the weekend. Let's jump first into the S&P 500. Oh, by the way, at the end of the broadcast today, well, we do want to thank Jay for being our first Patreon sponsor. He will be getting all sorts of goodies. We'll talk about those at the end of the show, including a live Q&A as we analyze stocks that he suggests. You can join that group too. You'll hear more about it, and you'll find links in the show notes. If you want to be a Patreon sponsor, you get all sorts of goodies. That's just one of many and several different levels, and we appreciate everybody helping us out. And we even have a free book on one level and free trader journals on another. So let's jump into the S&P 500. Down, going into the fourth week of down movement, still a red down candle. We see the derivative oscillator still gaining downward momentum. Price percent oscillator slacking off just a little bit, but still headed down quite strongly, even though the second day in a row of some strong up movement. We go into the two-day candle. What do we see there? Well, it's two-day charts, rather. We see the latest two-day candle that has formed. Actually, it's forming. I guess we would say it will finish forming on the second day of November. That is at the close of the business on Friday. But a big green open box candle pushing through the two-day trend line, derivative oscillator losing momentum still, price percent oscillator heading up. And again, we have now penetrated the two-day trend line. That is another bell that should be going off in your wheelhouse. Of course, we're not in the trade now, but whenever you see penetrations, particularly on the two-day chart of the two-day trend, that's some warning bells there. Again, don't have the critical crossover, which is that crossover on the price percent oscillator, but still watching as price moves toward the weekly trend line. We go to the 4-hour chart, and this is where we really see what's going on at the closest view. And of course, the market basically bottomed out, hit its bottom there around 264.62, and then started moving up on the afternoon of Tuesday, and has been moving up strongly since then on Wednesday and Thursday, up in the morning on Thursday and the afternoon. Now again, price movement right there, holding over the last day and a half or so at about 273 something. So again, let's just continue to watch. We do see that the price percent oscillator is skyrocketing upwards, derivative oscillators gaining momentum. But again, there is always a but here when you still have the two-day and the weekly and confirmed down moves. If this advance peters out, if it stalls somewhere around the 273, 274 level and rotates back over going down, we are still primed for jumping into a down move. Now again, we'll just continue to watch and see what we see and just how volatile these markets will be. That's where we are on the S&P 500. We next go to the Qs, up 1.32%. That's our biggest up chart. Almost as gold almost got as high, but 1.32% for the day. However, what do we see? Still confirmed down move on the weekly chart. Price percent oscillator not as strong as it had been the prior week. Derivative oscillator stronger. Big, long wick on the red candle, meaning, of course, that body has shrunk up, that the bulls were able to push things up after the bears had tried to tear them down. We go from the weekly to the two-day. We see, of course, the price percent oscillators heading up, still a ways to go before it can hope to cross over the red signal line. We see this latest candle, green open box candle, similar to what we saw on the S&P 500, but just now pushing through on the first day of this latest candle, just now pushing through the two-day trend line and still below the weekly. And we go, of course, next to the 4-hour chart. What do we see there? Of course, 2 days of strong up movement pushing through the two-day trend line, still below the weekly. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. So we'll just continue to watch. We're still primed for down moves, and if they occur, we'll be ready to jump into them. And we did have great opportunities. Two of them, in fact, on the Qs, the NASDAQ 100, one on the S&P 500 for great capturing of those down moves on your practice trades. Now we go to TLT. What do we see going on 20-year bonds? Well, down 0.15%. We have a red spinning top, means indecision tending down. Derivative oscillator still losing downward momentum going into the third week. Price percent oscillator, though, is still decidedly down. We go to the 2-day chart. And of course, we see the price percent oscillator just sliding sideways. Derivative oscillator losing some energy as we're going into the second down candle, pushing through the 2-day trend line. Hasn't changed that trend yet. We see that the gold weekly trend line is still pegged down. So we have a little schizophrenia here, as we've talked about once we had that 2-day chart crossover going up. Don't have a trade until the 2-day either goes in the same direction as the weekly, or the weekly goes in the same direction as the 2-day. Once that happens, we can start looking for potential trades on our 4-hour chart. We go from that 2-day chart to the 4-hour. What do we see there? We saw down movement big in the morning, a little bit of a recovery in the afternoon, but again, still ending the day down. Derivative oscillator getting downward momentum. Price percent oscillator heading down. We'll keep watching and see how 20-year bonds shake out. Now to our last chart. Gold. What do we see going on there? Gold up 1.29% for the day. We have a red spinning top, open box, which again is not as powerful as a solid red top going down, but it's giving us some caution there. Has pushed through the otherwise 2-week trend line that was existing there. Derivative oscillator, however, still going up. Price percent oscillator going up nicely on gold. We look at that 2-day chart. What do we see? Well, it was heading down until this first day of this last 2-day candle. We had a red down candle ending on Wednesday the 31st. So again, pushing through actually very quickly the 2-day trend line and then sitting right there on the weekly. And this latest candle is pushed up above the weekly and looks like it's trying to push through the 2-day. So keep an eye on things. Derivative oscillator still losing momentum. Price percent oscillator heading up just weekly. And again, we will keep our eye on things, particularly as we go into this 4-hour chart. And folks, it just has not had enough energy. Once it crossed over going down all the way back on Monday, the 22nd of October, it's just not had enough energy to cross over going up. Maybe this latest day was strong up movement in the morning and more in the afternoon pushing through the 2-day trend line. It will finally cross over, and if it does, it's going to give us an opportunity to jump into an up move on gold. We will keep you posted. Don't forget, at the end of the broadcast tomorrow, what do we have for you? We'll be preparing the comprehensive review and forecast. That's where you fill out your weekly chart. Remember, at the website, under all the show notes, whether you're listening on YouTube, iTunes, wherever it might be, or of course, hopefully you're subscribed to our daily market review and our weekly market review, where you go to the website, sign up under chartingwealth.com, and we email you conveniently everything that you need. You'll see in the show notes the ability to, of course, sponsor us at Patreon and get all the great benefits we have to offer. We already gave one of them away. If you're one of our monthly sponsors, live question and answer session as we analyze stocks. You'll also get our special short chart training. You will also get an update on the Qs. That'll be our quarterly training. You'll get that special update. You'll also receive how to chart Bitcoin and our special Bitcoin chart. And of course, if you go to that next level, the mid-level, you'll receive a 15-minute monthly telephone call from yours truly to really help you track what you're doing, give you some missions to accomplish and things to do. And after 4 months of sponsorship, we're going to ship you out a year's supply of the Trader's Journal. Plus, we give you a free autographed copy of our book. Folks, lots of ways that you can help us out here. We hope that we're helping you out here with a lot of education and good information. Always love to hear from you. Feel free to write us anytime, cw@chartingwealth.com, and follow that link in our show notes to our Patreon sponsorship for all the great benefits we have to offer to you, our friends. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.